Hey everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Thanks ever so much for liking, subscribing, and my 202 subscribers. Very happy with that. Just going to let you know that I've got my NFTs for sale. When we get to 10 of them that are sold, the prices are going to be going up. So there's 10 for sale at the moment at zero point 0.1 Ethereum, which is about $295 at today's prices. So please make sure that you take advantage of those low prices. And let's jump into the content. Okay, so I've not got very much to tell you guys new today, unfortunately, but I would like to just to show a couple of interesting things that I've seen on the chart. You can see actually that I've tidied up. This is my my daily trading chart, as you know. Some of you that have been watching the channel will know this is usually a lot more scribbly than this, so I have cleaned it up for you guys. And apologies it got in such a state, but a couple of things really, guys, that I've been looking at. You can see quite clearly actually that you've got this rising wedge formation now. So you've got the support level. We're actually on a 6-hour time frame here, but you can see you've got this support line which is formed nicely, and you've also got now this descending uh, resistance line here. It does look like it's a little bit poorly drawn actually, guys, on here, but if I click on a daily, you'll see actually I've drawn it on a daily scale. And you can see actually that from the wick highs, candle body highs here, candle body high, and the wick high here, it's actually drawn more clearly on a daily time frame. But when you go into the the 4 hourly and you zoom in, it does look like it's a little bit clumsily drawn, but that's not the case, guys, as I've just shown you. Yeah, it's a little bit irritating if you're a good analysis yourself and you see, sloppy drawings and you start thinking, why is that like that? And I don't know, I try not to, but I can't help myself. Sometimes I look at things and think, well, that's not drawn correctly, and then, you sort of lose a little bit of a little bit of faith in the person that's trying to show you these things. But okay, guys, so we've got this support line, downward sloping resistance line here. I'm going to go to a 6-hour time frame here, actually, just to keep it all on a cleaner page for you. So we've got a couple of options basically, guys. I mean, this now is because it's this falling wedge. If that comes into fruition and we get a bullish breakout, because there is a 68% chance that a falling wedge breaks to the upside. So if we do get a breakout to the upside, the measured move is actually this dotted line at the top here, which is 43,430. So, I mean, once we get above this dotted line here, which is 42,000, say 42,500, once we get above that line, then, the actual, once we're above that resistance, then the overall, market and direction does change to be much more bullish, as opposed to this, this bearishness that we keep seeing time after time. But we'll come to that in a second, guys, of why I think we're seeing this gradual trickle down in prices and things. Okay, so the chances are the probability and statistics that this wedge will break to the upside. Although you will notice I have marked on here that we have got potentially possibly a head and shoulders pattern, and if that does break to the downside, then you will notice actually that the measured move is all the way back down to the support line at the bottom there, which again is another significant support line, which goes back a long, for a long period of time. But let's just stick with what we've got on the shorter term time frames at the moment, because you will notice. Just if I just show you, just bear in mind this 32,000 mark here, this measured move all the way down the bottom there. You can see on the right hand side there it comes out at 32,500 region. It's interesting that you'll see. Actually, I've covered this in other videos, but this is on the Looking Into Bitcoin website. It's very good and interesting for you guys that are interested in deep dive stuff. But you'll see on here that Bitcoin, in the whole of the Bitcoin history, all the way going back to 2010 when it was first introduced, you'll notice that the Bitcoin price has never been below the lower logarithmic curve, with the exception of this area here. Now, I guarantee you that there'll be people there, watching this, which will know exactly when that was, and you can see there from the March, and it was March 2020, and we all know what happened in March 2020. So the only outlier to this is the virus and the pandemic and the effect it had on the markets. Other than that, Bitcoin has never been below the lower logarithmic curve of this chart, and if we hover over there, you'll notice actually, if I get it in the right place, that the lower logarithmic curve is around about the $32,080 which is interesting. 32,000, and you've got a measured move here if this breaks to the downside of 32,000. So maybe we'll come down, we'll bounce along this support line for a while. I don't think actually we're going to get down that far, and I'll tell you for why as we go through some other charts that I've got to show you. Some of you guys will hopefully have been watching the videos and remember when I was talking about this area here. Sorry, I'm just trying to just get it in the right place for you. You'll remember that we were talking about this area here and the way that the price broke out here, and I was talking about the bull trap that we were in at the top here, and how the price here could, we could see a similar thing happen where it comes above support, doesn't hold, and then we get this this breakdown. And some of you will remember that I said that I did drew this fractal, which is here in the middle of the night. It was it was in the middle of the night. I couldn't sleep, and I was up looking at charts and things, and I drew this fractal and frightened the life out of myself when I moved it across to the highs here, only to find that it's very, very similar to what we've seen here. Even this price action that we've got now, and this wedge pattern that we're looking at here, incredibly similar. If anyone ever says to you that fractals are a load of nonsense, some people don't believe in them at all. But you can see it's undeniable when you put that together. Even, I mean, if you just put it next to it, for example, even this bump here, where we've got this little consolidation before the next leg down, and now you've got this, this arching, which you've got in the center here. This arch here is this arch here. I mean, anybody that says fractals are a load of nonsense, guys, I've got my own opinion on that. Let's put it that way. So, but yeah, I just thought that was interesting, guys. And you'll also notice that the measured move, you've got this fractal coming down again to the 32,000. It ends down at 32,000, and you'll also notice that the measured move here, this arrow is, is the measured move of the head and shoulders. So the head to the neckline, you move that down, and you're you're lining up with where exactly the way the fractal is saying that, or suggesting that we could be ending up back at 32,000, and obviously you've got the logarithmic curves, which are also saying that the low is at the lows of the logarithmic curve, if you like, are 32,000. So interesting things. It's not to say that that's guaranteed. We'll definitely end up down there. Don't get me wrong. Nothing's guaranteed in this market, and I think we're in this Wyckoff accumulation, which I've been talking about for a number of days now, and I'll come to that chart in just a second after I finish moving this around. Okay, this is the chart that we were looking at previously, where lots of people were looking at this rising triangle on social media, and we identified that actually it's more of a rising wedge pattern here, which we were looking at for a long while, and I'm just showing you where we are on this chart. You know that my projection is once we've finished in this area and we've got this capitulation and everything out of the way down here, wherever we end up, I still think that this dotted line is where we're going to end up for the into the summer. So whatever happens down here, guys, I don't think we'll be breaking down. Certainly not breaking down below 29,000. You see the lows I've marked off here. I don't think we'll get down below there. I think we'll have some more skullduggery and some more shaking out of the market down in this area down here. If we do get down that far at all, of course, and then we'll get the the lift off into the summer. I still think that that's gonna happen. Traditional markets are also sort of on the brink of of decision making time, and so is Bitcoin and cryptocurrency. So things have got to happen reasonably quickly, and I must admit it is starting to look more and more bearish each day. But that's exactly what Wyckoff is designed to do. So let's have a look at Wyckoff. Okay, so this is the Wyckoff chart that we've been looking at, and you can see here we've been looking at this for a while, and we're expecting the spring here. You'll see actually I've drawn another fractal here, and now this fractal actually comes from across here, where you've got the the high here. So you've got the highs of this range here, and then you've got the price comes down, you get a bottoming W pattern here, and then you get a bounce, and then the price starts to roll over, And what I've said is that, you know, you've got this high here similarly. It comes down, you've got this, you know, bottoming pattern almost here, and then you've got the peak here. And what I'm saying is, what I've been saying is that this price action in this area from this peak is very, very similar to what we've seen here on that peak. So I've just drawn that little dot, that little circle in there, which reminds me, I want to show you that as well. So, I mean, this area here was the last time when we were talking about Wyckoff, and we identified in the trading group, you know, I identified, if you like, the Wyckoff that was happening here. But that little, if we go onto a weekly time frame here, what happened? I remember it very clearly. Actually, is that you've got the, you know, you've got the range lows here for the weekly. So you see, you've got these lows. You've got these lows here. I remember this very clearly. Once the price had broken the weekly support and came down, closed below the weekly support, then we got another week, you know, delving down even deeper. By the time we'd got to this area here, which was my little circle, which I had here just a moment ago, when we got into that area there, that was when actually I was saying, well, actually, no, I don't think this is Wyckoff anymore. I think that this is it, and you know, everything's you know, basically the market and Bitcoin had even tricked me out of my own analysis on my own Wyckoff theory into thinking, actually, no, I've been wrong. And you know, I just wanted to tell you that, guys, just to put it into perspective, just how deep this price can go before it turns around. And as you can see, you know, when it turns around and the Wyckoff spring is initiated, you know, you've seen the result. You know, it went from 29,000 to 69,000. You know, there is a chance. You know, on a grand scheme of things, if we look at this, you know, we have got a high, we've got low, we've got a higher high, and we've got higher lows here. Okay, so there is an argument to say that this is a bullish pattern, and we are in a continued uptrend. So there is a chance that, you know, that we may see something like this, where the spring takes us up to, you know, we get the spring, and then we get up to new highs, possibly even break those new highs and continue higher. That is a possibility. And if you look at previous cycles, in fact, you know, you can see the 2017 cycle, for example, is very similar to this one in that you had a broadening type wedge like this. Oh, sorry, I'm making a bit of a mess of this, guys. Sorry about this. So you had like this you know, broadening wedge, shall we say? So just scribble this on here quickly. So you had this, you know, a broadening wedge scenario here, and the price broke out, and you got the parabolic run up to the you know, to the 2018 highs from the 2017, sorry, the 2017 highs, sorry, I should say. So the run up to the you know, the yeah, so the highs of 2017 in December 2017. So you did have this type of formation where you had this rising wedge. The price actually came up, you know, it broke out in a bullish fashion, retested, and then you got like this accelerated move, you know, up to the 20,000 level. So, you know, that is a possibility, although I think that it's unlikely myself. I actually think that we're going to see, you know, highs of probably 55, just below 60,000 before we start to reject down towards the end of the year. And I've put together a video already, which I'll link in the description, and I'll put it on the end of the video so it comes up as a video card if you're interested in watching that. But it's like a mid to long term analysis of what I think is going to happen. And I do think that actually we're going to reject at about 60,000, come back down towards the end of the year, and then we'll be on, you know, in the next run up to the next halving, which is May 2024, from the sort of end of this year. So from November sort of time of this year will be the start of the next cycle and the run up to the May 2024 halving. But I'm going off topic slightly here, guys, so apologies for this. I didn't really feel like I had much new to tell you, but actually there's a lot that goes into these things, and as I talk, you know, I do tend to think of different things in different scenarios. But you know, I just wanted you, you know, to realise that you know, that anything's possible in this market, and what with the geopolitical situation as it is. I mean, I've said this a few times, but you know, if the world markets, the traditional markets, start to take off again, and money, you know, the traditional markets start to come down, and they don't do so well, traditional stocks, then possibly some of the money will flow out of those into the crypto market. It's possible, and also you've got countries adopting Bitcoin now. So all of this that we're looking at is basically based on mathematics of what's happened in the past. You've got all the money printing going on, which has never happened in history, to the extent that it has now. And you've got the geopolitical situation, and you've got, you know, all sorts of things which can go into the mix, which could mean that these charts just go out the window, and you may as well just, you know, they'll be useless to us, because all that this is we're looking back on history, you know, and we're measuring what could happen based on what has, you know, on like an organic growth of the market over the last 10 years, should we say. But you know, anything can happen, guys. Believe me, you know, anything can happen, particularly with the world as it is. You know, I mean, if World War breaks out, heaven forbid, but if it does, then, you know, everything's going to be affected by that detrimentally. It won't be positive. That won't be a positive effect. So again, it's something else to consider. But guys, I mean, you know, you can see, um, you know, from this fractal here. I'm just getting the right place. So if we put the high here, okay, which is the high, this high of here, okay, we put the high of that fractal there, of this high, you'll see that the price comes all the way down. It heads down to around about the 31 to 32,000 mark. Yet again, those numbers come into the mix of things. And then I think we'll get the spring. I don't think, as I said, that we'll get down to the 29,000 mark. I think that we'll actually, you know, we'll find the spring somewhere mid 30s. I think between 32 and 35, and then we'll get the spring, and we'll be off into the summer. Another thing, guys, if you're a bull, you may not want to watch this bit, but if you look at the CME, then CME closed on Friday for the month, as some of you will know. So if you look at the 20-week EMA, this is on a monthly chart, sorry. So if you look at the 20 EMA, 20 exponential moving average, you'll notice here that the blue line, which is the blue price, and you've got the red price here. So the red price is the candle close, and you'll notice that the CME did close below the 20-month EMA, which is not good. Having said that, guys, if you change this to the 21 EMA, then, you know, you'll notice actually that we didn't close below. So, you know, it's not good that we've closed below. It'd be nicer to have closed comfortably above, but you know, and that is a concern now. That once we lose this 20 EMA on a monthly, that's when we will really start to see lower prices. But again, guys, you know, we're going around in circles a little bit. You know my thoughts. I think we'll break bullish from here. I think that we'll get a spring first, where we go down into the low parts of, you know, the sort of the 32 to 35 area. We'll get the spring, and then we'll be into, you know, a summer alt season. So if we look at Ethereum, you'll notice when we look at Ethereum, that the price, you know, has continued down. So some of you that have been watching the videos will recall that I thought we would get, you know, some kind of W in action here, which we are, and then off to the races, as it were. We are kind of getting that, but prices have come down even lower. So we're right on support at the moment, but I don't think that that's actually going to be too much of a problem. If I just show you, some of you guys will have already seen this, no doubt, but if I just, I'll just highlight that for those of you that haven't noticed yet. You know, we have got this type of scenario going on now. You know, so we've got, yet again, you know, you could argue that that's a, you know, a falling wedge of sorts on Ethereum there. And obviously, when you've got Bitcoin there, okay, we've got a head and shoulders type pattern here. But the Ethereum one hasn't really got the same head and shoulders pattern. You know, I mean, if there was one there, which you could argue that, you know, you'd have to look very carefully and try and bend things to make that into a head and shoulders. I don't think that there's actually a head and shoulders pattern on Ethereum like there is as clearly on Bitcoin. And you know, Ethereum has been a market leader, you know, for this cycle. So it could be that if Ethereum finds support, it breaks out, to the you know, in a bullish fashion from here. You will likely see something along the lines of a bounce, breakout, and you know, and probably come back down, retest, and then be off to the races. Again, the summer alt season here. The reason I've drawn that like that is because you've got the lows to the highs, sorry, the high to the low rather, drawn there, and similarly to the Bitcoin chart in here. Just excuse my scribbles for a moment. You will see that that's where this comes from here. So when we've got, you know, when we're over and done with in this area here, and we start to break out higher, that's where, you know, the 0.7 retracement on Bitcoin. The reason I use the 0.7 is because if you back test that and go through previous cycles, you know, the peaks, after the peaks, the bounces are usually between the 61.8 and the 0.7, and possibly sometimes just a little bit higher than the 0.7. And somewhere between the 0.7 and the 78.6. So that's why I've marked that region there. And similarly here, you know, we're in this, you know, the realms of 61.8 to the 0.7 mark here. I think that we'll see Bitcoin go sideways through the summer. After we've got this out of the way, we'll come up. We'll see some nice price action. We'll go sideways through the summer, as will Ethereum, and we'll see a nice alt season. Based on the fact that Bitcoin will be going sideways, and so will Ethereum. I think that the money is actually going to flow into the altcoins, and that's where we're going to get the, you know, the nice alt season into the summer. But I'll keep you posted, guys. We're a long way off from that yet, and everything at the moment now is looking pretty miserable from Bitcoin and Ethereum's point of view. The only thing I'd say, I mean, if we look at like in the Ethereum world, I mean, if we look back here, for example, so this area at the bottom here, you know, that was in July 2021. No one was expecting when the price was there that we were going to get. I mean, just to demonstrate that for you, if I chop that off for you, and you look at just how dreadful things were looking back then. You know, no one was expecting, looking off off the base of this. You know, people would have been looking at. I remember it very clearly. You know, we were looking at this big, like, emming sensation that prices were just gonna, you know, continue to go down like that. But yeah, if we add the, you know, we all know now what's happened since then. So that was from here down the bottom here to this lows, and as you know, nobody was expecting that type of move off of those lows. In fact, you know, people here, you can see that we broke the lows. Maybe not the wick low, but we certainly broke the candle body lows here. Down the bottom here, we broke the. Hello. So yeah, we broke the candle body lows. So these lows were lower than the candle body lows here. Okay, so you know, here at the moment we're making higher lows all the way up this channel. You know, that they're higher lows. So you know, arguably we're in a healthier state here than we were here, and yet look what happened after, once this had bottomed, and we got this sensation. So you know, you can see just how quickly the market can turn around, and that's what I think we've got installed for us, guys. So let's keep our fingers crossed. I will keep you posted each day. And just one last thing, guys, just as a bonus, I just wanted to show you the BNB Bitcoin chart. And I was watching this all the way back here. We saw this big cup, and I thought we were going to get possibly a handle. We started to get the handle, but it did break down from that. And now we can see that actually we're getting this nice formation here. and we're starting to get, you know, this cupping formation at the bottom here. So, you know, you can see where the measured moves are from this type of price action. I mean, admittedly, you know, we are some of the way into the move, but I do think that, you know, into the summer, you know, June, July, August time, you know, we're going to see, you know, if we look at these lows here, for example, and you draw from the low to the high there, you know, it did take 62 days, which is 3 months, to travel that. So if we looked at the lows here and we just did a projection of 60, sorry, what was it? Bottom to the high. So 60 days. So sorry, actually 2 months, not 3 months. Sorry, I beg your pardon. So if we do the low to the high, 60. Yeah, so 60 would put us 60 days from the low would put us towards the end of May. But I actually think we're probably looking at 2 months more or less from where we are now to get to the highs. So I think we'll actually probably be looking at, yeah, somewhere sort of end of June, beginning of July time before we end up, you know, in this region at the top here. But yeah, okay, guys, that's all subject to Bitcoin behaving and not collapsing completely, and you know, no World War III breaking out or anything horrible like that. But guys, this is a nice looking chart. I think it's something that's worth looking at. I'm not a financial advisor. Please, you know, do your own research before you put any money into the market. And always remember, guys, take profits and buy something real. Thank you ever so much for watching. Have a lovely weekend, and I'll speak to you again tomorrow. All the best, guys. Take care.